markets make strange bedfellows. Hello, MarketClub members everywhere. Adam Hewison here, co-founder of MarketClub, with your daily update for the major markets. Not to get too political, but the markets, and I believe, are going to be in a holding zone for the next day or two, waiting for the first presidential debate between President Obama and Mitt Romney that takes place on Wednesday. Here's a question for you. Who, in your opinion, is more important? President Obama, Mitt Romney, or Ben Bernanke? From the market's point of view, I would have to say it's Ben Bernanke is the more important than either President Obama or Mitt Romney. Bernanke and the Fed are committed to pouring more money into equity markets in their QE3, print more money, and to heck with the future. I guess we can figure the future out later, right? Okay, equities based on the Fed are still in a bullish phase, and we have an upside target zone of 1550 on the S&P 500 sometime next year. The euro, most traders have written off the euro, but our trade trailers are saying that we're in a bull market, at least for the moment, and the dollar is the one with the bigger problems. Inflation watch. Pressure is building on the Reuters-Jeffries CRB index. Inflation will be arriving in 2013. The wild card, without a doubt, is the Middle East. We see no positives on that front and potentially major upsides in some of the oil markets. Now let's get back to reality with the major markets to see what our trade triangles are saying about them. So here we are, we're looking at the S&P 500, and you can see we are just basically locked in the sort of sideways market for the last 5 days. And we may see a little further push down, possibly to the 1425, but remember 1420, 1425 is the area where this market should find support. And what we're looking at, so right around these levels to these levels right here, this should be support. You have a long-term positive force line, basically a trend line. So there's a long-term trend line that comes in right around those levels, and I think that's going to hold the market. Plus, you're at the area where technically it's a Fibonacci pullback as well. So I think this is going to be if we see a pullback, I think that's where the market should probably stop. But again, the major, the 200-day moving average and also the 50-day moving average, this is the 200 right here, and this is the 50. They're all still pointed up and a ways from each other. The golden cross is not even close to being completed there. So let's clear the screen off, take a quick look at our next market, and that's going to be the Dow. And let's just zip to that. And here's the Dow Jones Industrial 30, and you can see a little bit of a negative day today. Not so surprising. I mean, you can see the flatness of this market. 1, 2, 3, 4, 5 days. We're above the PSAR. We're above the midpoint, and we're at an area. We still think this market can go higher. We have a plus 90, which is a positive reading. We may see some more of a pullback, but generally speaking, we think this market's going to be pretty flat until after the first debate. And that's going to be obviously Thursday. It's going to be a very interesting day, as of course that'll be the day after the debates. So next market, this is the market that was looking weak yesterday, the NASDAQ. And of course, that's such a large component. Apple is such a large component there, and how Apple does, this does too. But you can see we've had actually 1, 2, 3 days in a row where the market's actually closed, opened higher, closed lower, opened higher, closed lower. And today we're open higher and we're trading lower right now. So a little bit of a reset is needed on this market. But generally speaking, the trend there is also positive with a plus 80 and all of our trade triangles in a positive mode. So this market is going to be, I think, in a holding pattern until after the first debate anyway. So crude oil, this is an interesting market. I think really realistically, I think we are going to see this market once again rebound to the upside. And here's what we're thinking. Let's just scope this out just a little bit further. Longer term on the weekly, monthly rather, we have a positive thing. And that's really worked out pretty well for us in determining the longer term trends in crude oil. Now, the weekly is a little bit negative. So that's not the good thing. So reality is you really want to be waiting for the weekly to turn green. And if that happens, then you want to be long this market. I'm still of the opinion you've got the PSAR below the market, and I'm still of the opinion that we're going to see this market eventually move substantially higher, because I'm not convinced that we're not going to see some violence in the Middle East. And I don't think that's going to be good for anything. And certainly you have to remember, even though we say we are dependent on foreign oil. We really are, and that's our Achilles heel, in my opinion. So let's see how that plays out. But generally speaking, you've had the move up, you've had the pullback, and now I think we're seeing this market regroup, and I think we'll have another push up. So let's see how that plays out in the real world. So let's go to our next market. And the next market we're looking at is going to be the euro dollar. Now, this is the one I think has really surprised a lot of people. While this is coming up, you can see we've got a very positive day going here. We're at 29.49, 129.49. You can see we've talked about this pattern before of being a bullish pattern. And let me just scope the pattern out for you. We had the monthly buy here. Obviously, the market moved up, came down in that sort of flag formation, which is always a bullish sign. The fact that we've broken over the PSAR, over the trend line here with this flag formation, indicates we should see this market go up to the target zones we've set for it. And that's around about the 135 level on the upside. I think a lot of people aren't buying it. Not to say it will happen for sure, but the reality is this is a very large energy field under this market, which is capable of carrying this market much, much higher. Plus, this is a 50% Fibonacci pullback right here. So again, I think we've probably seen the worst of the correction. I think a lot of traders are scratching their heads saying, why is the euro so strong? Things aren't good over there. Well, maybe they're worse over here, and we just haven't admitted it. What happens in the foreign exchange markets really is a great truth teller, and maybe this market's telling you that things aren't quite as good as everybody wants them to be for the dollar. So let's clear the screen and go to our next market. Next market is spot gold. As you know, we've been bullish on spot gold for quite some time. And the trend, as we've said before, is your friend. And the trend continues to be positive, a plus 100. All of our trade triangles are in a green mode. We have a target zone for this market right now of around $2,000 an ounce. And we'll see what happens there. But the reality is this next level, let me just clear the screen. Let me show you what we're looking at also in the next level. Let me scope this out just to get a little more information here. And let's go 1 year. So you can see this level right here, this 1800 level is a big psychological level. If we go through that level, and I think we will, we'll see this market, I think, maybe go, well, I think it'll accelerate to the 2000 and possibly even to the 2300 level from there. So that's $2,300 an ounce for gold. And again, I think debasing the currency, printing more and more money is not a positive sign for money, but it's a positive sign for gold. As long as that continues, and I think it will, I think we're on a self-destruction track here, then gold will go higher. So let's go to our next market, and that's copper. Copper, as you know, we're bullish on copper. Copper's acted very, very well. And here's the action today. We're actually higher. All of our trade triangles are positive. So again, this is kind of a reflating the copper bull market. And again, if we see this market move over these recent highs, which were right around the highs came in right around the 383, 3.83, 3.84. If we go over that level, we're 3.80 right now. I think we'll see this market accelerate to the highs that we saw back here around the 4, which has been our target zone on this market. So let's see how that plays out. Next market, silver. Silver has been a really staunch ally of gold, even though, let's get this closer in here. Even though today is sort of a little flat day, still the market is moving, in my opinion, and is building a consolidation pattern to move still higher. Trend is up. You've got your cross here on the 50-day, just crossed the 200-day moving average back here. The monthlies kicked in. All of our trade triangles are positive. We can see no reason to be negative or short this market. Of course, silver vacillates between a semi-precious metal to an industrial metal. So right now, people are thinking it's a poor man's gold and are moving into silver. So let's see how that plays out. But generally speaking, we would not be surprised to see this market trading up to the $50 an ounce level in the future. Moving to our last market, that's the Reuters Jefferies Index. This is the one I think to really pay attention to, because this is the one that's going to tell you about inflation and the potential of really in a reinflationary economy. So the big level, we talk about this every day, but I want to keep hammering this home because I think it's really important, is the 320 level. If we go over that level, then we're going to see this market really take off to the upside, and we'll see everything reinflated, housing reinflated. Every asset that's a real asset will go up in value because it's going to take fewer assets and more dollars chasing the fewer assets. So let's see how that plays out. But generally speaking, are waiting for this weekly to go green. When that does, then it's I think we'll take a challenge at the shot at the 320 level. That's not going to happen today or tomorrow or even next week, but it will happen in my opinion. So hey, this is Adam Hewison. It is Tuesday. The presidential debates are tomorrow. I recommend everybody in America watch these debates. They're very important for our country. And I'll be back tomorrow, same time, same place. We've got a 1-hour show tomorrow at 1 o'clock, so stay tuned for that, or tune in tomorrow. And we'll be taking your questions and hopefully answering any questions you have on the stocks, futures, precious metals, or foreign exchange. I'm Adam Hewison for Market Club. Have a great trading day.